Thank you.
We are very comfortable with the cloud.
We like the cloud. Cloud
Yeah,
is fun.
a lot of our clients work on the cloud. We've got a lot of our clients actually work in the tech sector. So certainly it's something that we're very comfortable with technology. And thank you. We're very grateful that a lot of you are working on this technology, right, to make it even better in the future. So we're going to talk about Social Security today. This is probably one of the most common questions that people have as they're preparing for retirement. And it's important because, back in the 1930s, I think that was when Social Security first came out, and most of you weren't around. We weren't around then. But the reason why they came out with Social Security originally is that you had old people, especially in the Depression, that were starving and had no money in retirement. And what they did is they came up with a program, Social Security, to really be there as more of a backstop for people when they hit their retirement years, if they just didn't have the resources, for a variety of circumstances. Maybe people just didn't have any income in retirement. They did put this into place. And of course, over the years, it's become more of a significant part of people's retirement. Now, I think people really count on it a lot more, even if they have other resources, retirement funds and so forth. So it's an interesting debate over the years as far as what role Social Security plays in retirement planning. And I think we're going to hear a lot more of it coming up. That's one question I'm sure we'll get in the queue is, hey, is Social Security going to go away? How might that be impacted in the future if Congress were to go in and monkey with the rules, which they do from time to time? So anyway, we are here in the Keystone Financial Studios today, Jeremy and myself. So this will be a fun discussion. You're used to seeing our heads on Zoom meetings. So I know you're still here virtually, but we are actually in the same room. So that's definitely a fun experience as we put together the studio.
For our first chance to do this.
It is. So we'd love your feedback, by the way. So everything from sound quality to, we really liked your guys' ties or something like that, right? We're always, you always want your feedback. We always want to continue to grow and make things better. So I do notice also that a lot of you are adding questions in the queue. So just be aware of that. In the Zoom controls, there is a Q&A feature, a chat feature. We are going to be monitoring that as we go through the presentation. That makes this a lot more useful, I think, for everybody to have some interaction, for us to be able to hear what you're thinking, or maybe if there was a point that we missed that we didn't cover. I think that'll be useful for everybody, not just live here, but also in the future, because this will be on our YouTube channel. We'll be recording this. It'll be available after the fact for sharing. So that being said, let's get started. Today, we're going to talk about Social Security, again, which is kind of a multifaceted program. Sometimes we'll get the question, well, what about Medicare? Isn't that part of Social Security, or Medicaid, or Medicare, or a Social Security disability benefits? We will just touch on those things. Those aren't things we're going to get into as much. What we're referring to today more is Social Security income, the Social Security retirement program, in other words, that actually provides income for people in retirement. It's meant to be a supplement. Again, that was what it was meant to do, was to be a supplement to people's budget. And of course, a lot of the work that we do with clients in retirement planning, or we like to call it financial freedom, right? Where work becomes optional. In other words, at the point where you've got a plan in place that you know you could retire at any point in time. We've got a lot of clients that are in that position. They're financially free. They continue to work because they want to, not because they have to. So Social Security certainly is a part of that. And for 30% of the population, just so you should know, 30% of the population, they say that's their only source of income in retirement is Social Security. But the other 70%, though, they've got other resources. They've got other stuff, either because they're working part-time, or they've got pensions or retirement funds, investments. So really, we're referring to people of all income levels, all net worths, but it's an important decision to decide when you collect and how you do that. So we are going to talk about that today. So when should you start receiving retirement benefits? That is a choice. As you can see here, people are wondering, do we get it at full retirement age? You might have heard from a friend that made a decision to get it at 62, or know somebody else waited until 70. We can tell you that this is very individual. It's very much based off of your circumstances. So there's no cookie cutter answer. We're going to go over a lot of the factors, but really the definitive answer is going to come down to what you want to do, right? Once you've got all the facts, we want to just make sure that you've got the optics to make a good educated decision, right? Instead of just making it emotionally. Emotional investment decisions or emotional financial decisions usually don't turn out well. So that's why we're here, right? We like math, we like logic, right? And so at the end of the day, it's totally your decision. You may just kind of gut feeling make a decision, but at least you'll know kind of how things work.
Absolutely. Yeah. And that's one we get a lot too. If we kind of go to the next one, why isn't an important decision? Because I think a lot of people don't understand that when you do make the decision, it's basically made, right?
Right.
You don't get you don't get a do-over, if it were. So that's why it's important to kind of know what you're going into before you get into it, and why it's good to have someone to kind of bounce ideas off of and make the right decision.
Yeah, and I think that's a really good point too, is when it comes to retirement planning, especially in the accumulation phase, right, where people are building up their assets, paying off their debts, kind of getting in a good financial position. That's a lot of times where we start working with clients, is during those years, as they're kind of they may not be starting, and we do have some clients that are actually just starting, and we love working with young people earlier in their careers as well. But it's an important factor. The accumulation phase, the distribution phase, of course, is when we start making decisions like this, right? As far as when to start taking Social Security, where to take your money from, as far as your different accounts. We love those discussions with people, not only because we think it's fun, but also we can see the consequence of it is that you don't get a do-over generally, right? You don't get a do-over when it comes to your retirement planning. Many of the decisions that you end up making are kind of permanent decisions. You only get one shot. So we want to make sure that we get it right.
Absolutely. Yeah. So what are the factors that we're looking at? What's the factors that we primarily take into account?
Yeah. So, I mean, there's a lot of things that kind of come into it. One of those ends up being, your full retirement age, depending on what your age is. And we'll get into that. Full retirement age can be different depending on when you were born. So we want to look at your own benefit calculations. Social Security actually takes the top 35 years. That's one big misconception, is that some people say, well, it's the last 5 years before you retire, or it's the top 5 years or something else like that. Not true. It's the top 35 years actually in your career. They average that out. There's a formula that kind of goes beyond the scope of what we'll dig into today. But just know that when you look at your Social Security statement, they're taking the top 35 years. And one of the interesting things, if you look at your Social Security statement, go back, it actually will show your earnings history all the way back to, when I was a paper boy. I can see the income when I was like 11 years old. So kind of funny.
If it's reportable income, it's on there.
Yeah.
Absolutely.
Yeah. So that's a big factor, is your own benefit calculation, your own earnings history. So the amount of your future benefit, effective earlier delayed retirement. Again, that's very individual based off of the situation you've got. As we go over, it's not even just how old you are. Sometimes people think, well, it's just about age, but it's not. It also matters kind of what your work history was. Did you work and pay into Social Security during your entire career? Or did you pay into like a teacher's retirement fund or railroad retirement or something else? There are factors that come in there. It does matter if you've been married or not. And those circumstances even matter to say if your spouse passed away, or if you got divorced and you got remarried, all these things kind of play into it. Just like any kind of law, it's all convoluted, right? I mean, there's a million different nuances and changes they've made over the years. So that's why we have jobs, right? Because this stuff is complicated.
Yeah, I've actually seen the formula. I went and looked up the formula that they use to calculate benefits, and it'll tie your brain in knots. It's pretty crazy. You almost need a math degree to understand it. So.
Yeah, just like any legislation. Yeah, they monkey with it over the years, but they don't really know all the implications. So that's why, again, we have jobs, because this stuff is complicated. How long you expect retirement to last based on life expectancy? That's definitely a factor. If you're somebody who hopefully, you're not thinking like this, but if you think you're not going to make it past age 70 or 72 or something like that, then that would weigh pretty heavily, right? As far as wanting to draw benefits and start getting money earlier, because that definitely does factor into this. But as we'll talk about, it's not just you, it's also if you're married and your spouse possibly could be collecting benefits off of your record later on.
Absolutely.
Whether you plan to continue working, we'll dig into that certainly, because that does matter. And the rules have changed. Remember that a lot of this stuff, it gets confusing, because a lot of times people say, well, wait a second, doesn't it work like this? Well, it might have used to work like that, but then they changed the rules, and that could definitely make a difference as far as how you make your decisions. Other sources of retirement income definitely matter. Again, various sources of income we talked about before. Income tax is a big factor. We spend a lot of time on that in our planning with clients. We're not CPAs necessarily, but we are CFPs, certified financial planners. So we know a lot about taxes, especially when it comes to retirement planning. So we do spend a lot of our time and our work on that with clients.
Absolutely.
So definitely be aware of that, that it's not just about investments. It's not just about single decisions. It's about how all this stuff interacts together. So, and then finally, again, how your spouse might be affected, that does make a difference. So it's not just about how long you're going to live. You also have to look at your spouse's earnings record, or if they have an earnings record, how old they are. That's another factor too. If there's an age difference between the husband and the wife, that definitely plays into it as well. So we've got tools. The good news, you might be already like, oh, mind blown. We have tools to help you figure this out and to, again, run the illustrations, run the numbers, because we want you to have optics. We want you to actually be able to see, kind of like your dashboard in your car. We want to make sure that you can actually see the different things that are important, right? As far as having a safe and ticket-free travel down the road.
Yeah, another part about how your spouse might be affected that a lot of people I don't think take into account is if they have a government pension.
Right.
Because there is a government pension offset that definitely influences a lot of that.
Right. It depends on what government too, right?
Yeah.
If you were a federal government employee or a railroad employee, or if you were a state employee, if you sometimes even municipal, you might have been a municipal employee that didn't pay into Social Security because of the retirement plan. So yeah, if you have any of that stuff, know that those are really, really important things to dig into and understand the implications before you make a decision.
Yep. So, yep. And actually, I think we need to go the other way.
Oh, I clicked up instead of down. There we go.
So this is one that we get a lot actually, is what is full retirement age and why does it matter? Really, so you can see it's not so simple. We were on a call literally just last night with somebody who did not know that the full retirement age doesn't always match up with Medicare age, age being 65. So you can see there on this slide that there is a difference. So 1943 to 54, it was just straight 66. And then I don't know where they came up with this kind of phased in approach. If you were born between 1955 and 1960, it's kind of an interesting way, but every 2 months, basically for every year, to determine your actual full retirement age. I think a lot of people that we do talk to, they do know that it's not just 66, it's 66 and some odd months. Luckily for any of us born after 1960, they haven't changed it yet. So 67.
No, I think this is like 30 years ago. They made this change because, and they, meaning, Congress, sometimes they get stuff done, right? And they pass some legislation kind of with the idea that, people are living a lot longer. And we can see a problem down the road, where Social Security may run out of money because, people are living so much longer, they'll be collecting so much more in benefits. Now, of course, they haven't changed it in the last 30 years. And as you know, you probably have seen it on the news that, and they've known this for a long time. So it's not like this is a big surprise, is that Social Security is expected to go insolvent in the 2030s sometime. If you look at your statement, I think they actually say it on there, the exact year, it changes a little bit, but the 2030s mean that there won't be enough money to pay full benefits. That doesn't mean that you won't get anything necessarily, but it would be cut back. I think it was like 30%, something like that.
Something like that. There's been a lot of different legislation on it, and it changes daily. Everybody's got some kind of plan, but it's one of those things that nobody in Congress really wants to tackle. Because
it's not a good way to get reelected.
It's a really bad way to get reelected. Nobody wants to do it.
Basically, because you're either cutting benefits or you're raising taxes, and you're going to alienate about half the population either way, right? If you go either way. So that's why they keep kicking this down the road to the point where, it might affect a lot of us. In fact, we talk to younger clients, people in their 20s, 30s, 40s, even 50s. But a lot of people say, you know what, I'm really not counting on that. I don't think it's going to be around, right? I certainly don't want to expect getting the full amount of Social Security. So definitely puts more pressure, and, gently pressure all of you that it's really important to make sure that you accumulate enough money, that you're really focusing enough of your income right now to put away for the future, because you may not be able to depend on this as much, especially if you're younger. I think there's increasing odds that the money may not all be there like you think that it will.
Probably not in its current state anyway.
No.
Yep. So, and we kind of hit on this one already. The highest 35 years of earnings are indexed. So one of the questions we get a lot is, what does that mean? What if I didn't work 35 years? What if I worked 45 years? It's always the top highest 35. If you didn't work 35 and you're taking Social Security, they just use what they have.
And they do count zeros, by the way. If you only work 30 years worth of Social Security. And again, that's important. It's not that you didn't work longer, but you may have worked part of your working years. In Colorado, we have a program called PARA, for example, that is a Social Security substitute. Well, it may be that you worked 20 years in one system and 20 years in another. So just know that they're going to count zeros for the years that you didn't have in that 35.
Absolutely. Yep. So how much benefits will you receive earlier? So this is where age does kind of take an effect, right?
Yeah.
So you can start as early as age 62. When you get your Social Security statement, there's a couple different numbers on there. The main one that they put on, and they actually changed how it looked, I think last year, they made the change to how it looked. Because it used to be just real big and bold on the front, on the front page, but it's not anymore. But they say, age 62, they put your full retirement age benefit, and then they tell you what your age 70 benefit is. And so the idea being that the full retirement age, that's kind of their starting point, right? And then you can see it really decreases down every year that you take it earlier.
Yeah, you can see the actual benefit reduction. It's 25 to 30%, depends on when your full retirement age is, but it's definitely a cut. Now you can make the argument and say, yeah, but that's a lot of money I would have been receiving earlier. And again, that's where a lot of this comes down to longevity. And when do you think you're going to head out of here, right? That's a big part of this. If you don't expect to live a long life, that's a big factor, especially if you've had a lot of illness, things like that. Maybe that factors into your decision, and some people do decide to take it earlier.
Yeah, we've talked to people also who say, I don't have a lot of faith in the longevity of Social Security.
Yes,
system.
it's not even their own personal longevity.
Right?
So longevity in the program. Yeah, exactly.
Yep. Lots of reasons for lots of different things.
Yeah. So, and then, there are benefits for receiving the money over a longer period of time. So you can see that if you wait until after full retirement age, you actually do get an increase. It's about 8% a year that you get an increase by waiting longer. And some clients do that. I would say it's a minority of people actually wait until age 70. But for some people, they look at the numbers, and especially if they've got a lot of longevity, they might say, yeah, I actually like the waiting until 70. I really don't need the money yet, so I'm going to let it keep going up. But again, lots of factors that play into it. One person's situation can be completely different than another.
Yeah, absolutely.
So you can see the full benefit comparison. Again, we'll just use age 67 here in our illustration. For many of you, by the way, it is age 67, especially if you're a number of years away from Social Security. For us, it's age 67. Yeah. If we're lucky, it's probably will be 70 or something else. Right. Or not there at all, right? Yeah. So, but you can see that you do get a pretty big increase. It's about an 8% increase per year, again, after full retirement age, and you get that benefit reduction. So you can see how the numbers will impact the income that you'd be receiving.
Absolutely. And so we keep talking about, what's the difference longevity wise, et cetera. So there are crossover points where basically if you start taking it at age 62 versus age 67, if you wait till age 67, for most people, I would say, really all you have to do is live to your mid 70s, somewhere 73 to 75. If you live at least that long, you're going to make more money by waiting until age 67 as opposed to age 62. Same thing works for age 70, right? It just pushes it out a little bit further. So if most people, if you say, I'm going to wait until 70, typically you only have to live into your early 80s, 81, 82, 83, somewhere in there for most people again. And until it says, yep, this was a cost benefit. It was better to wait. So for instance, like you had said earlier, if you don't think you're going to make it past 75, does it really make a difference, to wait that long, or should we take it earlier?
Yep, absolutely. So again, we repeat this over and over just to make sure it's clear, is that it really depends on your situation. So you end up looking at the dollars over time, and it ends up being a big chunk of money. So again, it just does depend on how long you're going to live. And it also depends too, one factor that people think about, if you're not among the 30% of the population that's just living on Social Security, well, if you're not drawing early, then that means that if you're retired, in other words, if you're still working, then maybe you don't even need the money. But say if you've retired before age 70 and you're pulling money from someplace else, well, what rate of return would that be getting, right? If you're pulling it from your bank account, which is probably paying close to zero right now, okay, maybe that's not the worst thing in the world. You're getting the increase by waiting on your Social Security. But say if you're pulling from investments that maybe over time, at least right now, the market's not fantastic, but over time, maybe your investments have averaged 7, 8, 9, 10, 11% per year. And you think that, hey, after the current market stuff going on right now, we're probably going to return to that. I could be really losing out an opportunity by pulling money from investments that would have been earning a much higher rate of return. So you really do have to look at that as well.
Absolutely. Lots of factors. One of those factors being, of course, how long
Mhm.
retirement's going to last. We kind of hit on this. But according to the stats from Social Security, 1 in 3. So you got a 33% chance of living till age 90.
Yeah.
That's not a bad,
Yeah, and those
bad chance
numbers in
entirely.
general have been going up.
Mhm.
Believe it or not, the numbers actually went backward a little bit the last couple of years, sadly, because of COVID and some of the stuff happening there. Also, unfortunately, it's a drug epidemic and things that are going on there that has been taking out some younger people. So some weird anomalies the last couple of years. But in general, we look over the last few decades, these numbers have been going up.
Mhm. And yeah, and that's, one of the reasons why there's issues again with Social Security, right?
Yeah.
People are living longer, less people are paying into it.
Yeah, it's a demographic problem more than anything because you
Mhm.
had the baby boom, and this isn't busting on the baby boom, right? It's but the baby boom didn't have enough kids.
Yep.
Basically, it's kind of you
Yeah,
look at
that's
you look
true.
at and you can pull up the charts and graphs online. It's kind of interesting, but you look at population changes and birth rates, and basically there weren't enough kids that were born in the 70s and 80s. So
Mhm.
right, there weren't enough of us essentially, and there aren't enough of us right now paying into the system. The way it was designed originally is that with the assumption, again back in the 30s, it was designed for the fact that, boy, there's always going to be more workers than there are recipients. And so this is never a problem, right? There's always
Mhm.
enough money kind of going into the system. But now we're finding about 10,000 baby boomers a day. And this has been for a number of years now, but about 10,000 people a day turn age 65. And for a lot of people, because Medicare benefits kick in at that age, for a lot of people, that's kind of when they say, all right, I don't really need my company health benefits anymore.
Yep.
Now I'm done. I'm going to retire. So that takes even more and more income because you don't really pay payroll taxes after you've retired. So that takes that money out of the system. So that's kind of what we're looking at now is kind of a demographic problem.
Absolutely. Yep. And so really it comes down to full retirement age. And why does full retirement age matter? Well,
Yeah.
mainly it's because that's when job earnings basically come into effect,
Yep.
right? So when you reach full retirement age, whether it's 66 and 2 months or 67, that's kind of the Social Security Administration's point where they say, we don't care if you continue to work at this point. You can get your Social Security benefits just fine. If you go before and you say you start pulling at age 62, but you're still working, any earnings that you make from that job, if it's over, I think the new number is 19,000 some odd dollars right now, is going to reduce your Social Security benefit as you're taking it. So something to keep in mind if you're still working and you're thinking about taking Social Security or waiting, full retirement age is a pretty big number there.
Yeah, it is. And that rule has changed. I can't remember what year it was that they changed that, but they did change it in that it used to be that they always penalized your Social Security if you're working. You could have been 89 years old and still working. And Warren Buffett's 92, right? I mean, there are people that are still working,
I
right?
wonder if Warren Buffett is taking Social Security.
I would hope so by this point. So, the thing was, is they used to penalize you no matter what, which, really wasn't fair. So what they did is they changed it and they said that if you wait until full retirement age, we're not going to reduce your benefits anymore. You can continue working as long as you want to in retirement. What they're trying to do basically is discourage people from joining it too early at age 62 when they're still paying in. And again, we could debate about that, whether that was a good decision or not, but yeah, they did change the rules, right? So after full retirement age, it gets to be interesting again. If you've got a job income, some people would say, you know what, I'm going to let my benefits continue to go up. For somebody else, they do the opposite. So it does come down to some of it's logic and math, some of it's kind of emotionally what seems right to people. So yeah, you do go back and look at the reduction factor again, 19,560. The interesting thing is that year that you reach full retirement age, they give you a higher ceiling on that. And then after full retirement age, you can work as much as you want to.
Absolutely. So $1 withheld for every $2 of earnings that exceed 19,560. Yeah. So, you don't have to work a lot of hours to hit 19,560.
It would have to be a really part-time job.
Yep. Yeah. So that could impact you pretty quickly.
Now, one thing I will throw out on that is that sometimes we'll find that people their own decision, they take it early, they take it at 62, 63. And we saw a lot of this. We saw a lot of people take early retirement packages during COVID. A lot of companies offered early buyouts, things like that. So somebody took the package, they say, I'm just going to take my Social Security, but then maybe a year or two later, maybe it's now, maybe they get called back, or their employer calls them up and says, hey, we want to do a contract, right? Maybe not bring you back on full time. We want you to come back and do a project for us, something like that. So just so you know, the money isn't completely lost.
Okay,
Oh,
I believe we're back. I'm sorry, everybody, if we lost sound there for a second. But I do believe we are back, yeah.
yeah, we need to click again so I can advance.
All right, thank you, Melissa.
Good. Sorry. Thanks for being patient, everybody, and hanging with us.
Yeah, thank you. Appreciate that.
Let's go back just
Slight
a
technical
slide or
difficulty.
two. Yeah, I'm going to click on the screen there
Oh,
so I
whoops.
can.
Yep, there you go.
All right, there we go. So we'll go back a couple minutes, unless you can read our lips, and then that's
That'd be
great,
cool.
right? We did want to go back and just hit this point really quickly, in that before that full retirement age, you would have a reduction if you make too much money. You wait until full retirement age, then you're fine. You can work as much as you want to. So that year, though, Jeremy was just mentioning that year of full retirement age, they do give you a higher limit. In other words, that you can kind of retire and draw the benefit. So just be aware of that. There's lots of gotchas here. There's a lot of things that could impact when you do this. A lot of kind of potholes, in other words, where you can really not understand how it works and then make a decision that you don't like the outcome.
Absolutely. Yep. Timing is important there. So.
All right. Other sources of income. We talked about this before. And again, thank you for those of you who heard us go silent there for a while. We've got different sources, unless you're just living on Social Security. And of course, we know part of the population is, not to minimize that at all, right? There's, to a large extent, that's why Social Security was put into place to begin with back in the 30s, because there was a percentage of the population that, especially in the Depression, right, just didn't have anything. They didn't have any source of income. And so that's why Social Security was put into place. But it also does matter if you're in the 70% of the population that does have savings investments, or you're still working, you're Warren Buffett, whoever it is, right, that you're still plugging away. My dad just retired, was it last year? So he worked until 77, something like that. Worked at the same company for 50 years. And there's a few of you. We know we've got a few clients that you just loved what you were doing. And then some of you are still plugging away, which is great. So, and then again, pension benefits we talked about before, that can have a big impact depending on where the pension's coming from too, whether it's the government, it's a company pension, that definitely can play into it as well. So we love to play with what ifs and play with numbers. So that's part of our job, right? Is to help you figure out, how do I pull all this together, not only into a plan, but also give me optics. And so I'm able to actually see and make some decisions. So it's never our job to make your decision for you. As a financial planner and certified financial planners, we've got 3 on the team, and you always should work with the CFP because that's the gold standard in our industry. But that's our job basically, is to help you see things that you don't see on your own. And a lot of times we get too close to stuff, even if we're really smart. We work with a lot of smart people. People just, they either don't have time, they're not interested, or they just want somebody that can see things differently and has a lot of experience going through these situations. Taxes.
Yeah, good old taxes. This is the fun. I've had plenty of questions on this. I know you have over the years as well.
Yeah.
You know, Social Security basically comes out of your paycheck as a tax every year.
Does payroll
then
taxes.
as a payroll tax, right? And then you get to pay taxes on those taxes that you paid.
Yes.
So seems a little funny, but really the thing to keep in mind, and it goes in line with what your income is in retirement, right? And so basically, if you make between 25 and 34,000 and you're single, or 32 and 44 and you're married filing jointly, if that is your income, then only 50% of your benefit, half of your benefit, is probably going to be taxable income to you. Okay. Whereas if you are above that, and it doesn't take a lot, right? 44,000 isn't a ton of income, you know? So if you make above that, typically for most people, 85% of your benefit is going to be,
that's where most of our
taxable
clients
income.
are. Frankly, that's what most of our clients aren't able to get under that $44,000 number. And if you think about it, they do studies on this over time, right? And again, every situation is different, different parts of the country and all that. But they've done this happiness study before, where they say, does money actually buy happiness? And of course, you know, you have to go back and look at all their different factors in the study, but, you know, does money buy happiness? And to an extent, the answer is yes, actually. So what they found, the researchers found that basically, as somebody goes from 0 income up to about $75,000 in household income, this is back when they did the study. Now that number is more like $100,000 per year, is that up until that point, you're probably just meeting more of your basic needs. In other words, your housing. Of course, housing's gotten a lot more expensive, but your housing, your health insurance, your food, your gas, your utilities, maybe some basics, you know, of things that are, you know, enjoyable, right? Some limited travel. But really up until that point, they found that actually money kind of does buy happiness as far as people's quality of life. But it's also instructive, though. I think once people have got over that number, it just flatlined. In other words, you know, from 100,000 to 100 million didn't matter, right? In other words, it didn't actually make people happier after that point. So that's not really the point of this seminar, right? Is the emotional side of retirement, but we do want to make sure that people recognize that as well, is that there's the financial end, but there's the emotional end too. And we've got a lot of experience in that area, kind of helping people make that transition into retirement. So point being, though, is that for most people, they're not going to have an income that low. It's pretty hard to get down to these numbers. So really, as far as planning purposes, you should factor that about 85% of your Social Security is going to be included as taxable income. Whether you like it or not, whether it's fair or not, we don't make the rules, right? That's just the way it is. So just be aware of that factor.
Yeah, something to consider for tax planning.
Yeah.
And then of course, something to be considered for kind of legacy and estate planning as well, as how does this affect your spouse?
Yep. And one thing to note too is that beyond a spouse, with some limited benefits, if you've got a disabled child or something like that, there are some situations, or if you've got children that are minors and you pass away, there may be some survivor benefit that they would qualify for. But for the most part, there really isn't any kind of death benefit for Social Security other than for your spouse. So that's what we're talking about here, is that it does matter not only if you're married, but if you've ever been married, you know, and the marriage ended for a variety of reasons. It could have been that your spouse passed away, and there could have been divorce, of course, some tough situations, right, that people have been through. But you do want to still look at the fact that Social Security, whether you do or not, Social Security does look at that, right? And it does impact your benefits. So it does matter for survivor income. It does matter as far as your overall household income. It does matter as far as ages that end up coming into it. So spousal benefits, retirement benefits, are based on your earnings record. At full retirement age, you're entitled to receive 100% of your full retirement benefit. So where it comes into the spousal benefits is that they're based on your earnings record, that your spouse And again, age differences can change this a little bit, but for the most part, your spouse is going to get a minimum of 50% of your full retirement age benefit when they reach their full retirement age. So I know that's kind of a mouthful, but yeah, you kind of have to look at that. A lot of people don't realize this, right?
Yeah.
They don't realize that, well, wait a second, I never worked. And so we get people that say this,
Yeah.
right, in discussions that, oh, well, I never, worked, I worked such a limited amount, I don't qualify for Social Security. And then they're pleasantly surprised when we actually start running the numbers and they find out, no, actually,
Yep, you get
because
the
of your
spousal benefit.
spouse's record, yeah, you actually will get a chunk there. So it actually can really boost your retirement income.
Yeah, and that actually answered one of the questions that we had, a
Mhm.
married couple. I
Great.
think Todd asked that one.
Yeah, we've got a lot of questions up here, by
Yep,
the way.
one spouse dies. Is it true the other spouse is able to receive the higher amount between the two? Yep.
Mhm.
That's one nice thing that Social Security does, is they honestly always want to try to give you the highest benefit. And so when it's if the husband, let's just say the husband is the worker, the wife was a stay-at-home mom, or for whatever reason, maybe a teacher or something like that, right? Didn't
Yep.
pay into Social Security. They would get the 50% benefit, and then when the spouse passed away, they would get the bigger of the two benefits,
Yeah.
either the full one or their 50%, but it's always the bigger of the two.
Yeah. So we did talk about that a little bit before, that it doesn't just matter how long you're going to live. It matters how long your spouse is going to live too, because it could be that if yours is the higher amount, and maybe you haven't had the best health, or maybe you genetics or whatever, right? You have some reason to believe that you're not going to live a long time. You also have to look at your spouse, and maybe everybody in their families live to be 98 years old. So it could be, if they're going to be the one, in other words, if somebody's going to be drawing that higher amount for a long period of time, you do kind of have to look at that, not just one spouse, but look at both spouses.
Absolutely. Important stuff.
Yeah. And then again, there's a reduction factor. As you can imagine, we said full retirement age is when they would get 100% of what they're eligible for. If they draw early, they can take it as early as 62, but they do get hit with what we talked about before. They do get hit with kind of a penalty. In other words, they wouldn't get the full amount.
And that spouse cannot, they cannot claim the spousal portion until the working spouse actually does retire.
Right.
A lot of people don't
Good point.
kind of take that one into effect,
Mhm.
but it is something to consider as well.
Yep. Yeah. So one area that comes up sometimes is that maybe the primary earner or the higher earner, they might have made the decision we talked about before, that they say, well, I'm going to wait until 70 until I start drawing benefits. But maybe they've got a younger spouse that wanted to start drawing benefits when they reach full retirement age. Let's say they're 4 years younger, just to make it convenient. Well, they can't draw their spousal benefit until the primary earner starts drawing theirs. And with the spousal benefit, that's a factor too, is that they're not ever going to get more than what they would get at that full retirement age. So that can factor in as well.
Absolutely.
Yeah. Survivor benefits, you could take it as early as age 60, but again, it's subject to the reduction. So a lot of times, even for a survivor benefit, it's better if somebody waits longer, but it does depend on all those different income sources and factors we talked about before. So certainly there's a power in delaying benefits. You can get more money if you both waited until age 70. And again, we could run the numbers that kind of would maximize the amount that you could possibly get. We should say it just to make sure that it's clear that you'll never get more. Nobody will get more than what you would get at age 70. In other words, and we've run into that before. Where somebody just didn't know and they worked past age 70, and then they realized, oh boy, that there's no benefit. In fact, I'm just losing money now.
I should have been taking this 2 years ago.
Yeah. So these mistakes can be expensive. We think about the market, investment mistakes, and things like that people could make. Sometimes, Social Security mistakes, or Medicare mistakes, or tax mistakes, estate planning mistakes can really dwarf what benefit you would have had by picking mutual fund Y versus mutual fund X. Not to say that stuff's not important, but that's why we do comprehensive financial planning, right? We're not just looking at one thing. We're looking at how all these things are interrelated.
Mm-hmm. Absolutely.
Yep. So again, kind of shows the illustration as far as benefits of waiting, and survivor benefits do go up as well, at least if they continue to delay. So this is one that most of you, this will not apply to.
Right.
But if you were born before 1954, you might have remembered that and you might even talk to people, right? The older friends or something like that did something called file and suspend. And essentially what that allowed them to do is that a spouse could file and it would allow the other spouse to go ahead and apply for their benefits, but then the primary person that let their benefit. It was kind of a little trick, right, that Congress figured out. And that's why this doesn't really work anymore. But if you've talked to people who were doing this, again, a lot of the people on this call, this wouldn't apply to, but just be aware of that. That's kind of what they're referring to. But if you were born before 1954, that's something to keep in mind. Jot that down as a possible strategy that could apply to you. So again, we'll use the example, but again, it was kind of that same thing of.
I would say most people in this boat probably already know about it or have done it that they can, but yeah, it's age, 1954 quickly getting past that. So I think for the majority of us, this is just a non-issue.
Yep. So, and we'll hit questions here in a second too, but a lot of you have great questions, by the way. Thank you for doing that. So, there's a lot of choices that come into this as we kind of, wrap this up. And then for those of you who are on live, this is really helpful for you because you can benefit from other people's questions. But really, there's a lot of choices that need to come into play. You might want to take Social Security earlier. Again, we touched on some of this before, but if you need Social Security income right away, and again, there's some tough situations out there, we know, especially for people who just don't have any other resources. And that's what studies have shown is that a lot of the people that do take it at 62 are taking it because they have to, not because they really want to necessarily.
Yep.
Maybe they've had some health issues. Maybe their career ended early for some reason, and it's really not an option for them to go back to work. So it might be that they have to make that decision. Again, they want to invest their benefits, and not that we are going to guarantee you by any means that taking your Social Security money and investing it is a good idea. Maybe it is. I don't know. Maybe we could talk about that.
It's been brought up once or twice.
It has.
Yeah.
So, and sometimes people do. By the way, sometimes people do take full retirement age, and they say, I'm still working, but I'm going to take that monthly amount, going to drop it into some investments, and they would have to believe, right? Not guaranteed, but they would have to believe that was actually going to pay off. They'd make more money by doing that.
Absolutely.
So, and again, that spouse, wanting to claim benefits, that would also be a reason to go ahead and take Social Security.
Yeah. And or if you want to do it later, thinking that the higher monthly benefit, that I would say that's probably the biggest one, is people want the higher monthly retirement benefit. They believe that they're going to live past that 80 mark.
Yep.
And in the long run, they're going to make more money.
Yep. And I like your optimism. I hope y'all do too. That's an important part of retirement too, is taking care of yourself, right? Especially if you did, maybe that's a good way to pressure yourself to stay healthy, right? Is you delay your benefits.
Got to maximize that Social Security.
So you can outsmart the system, right? And get more money out. That's a good idea.
There you go.
So. And then sometimes people wonder, how do I actually do this stuff? How do I find out what I'm actually eligible for? The easiest way is just go to socialsecurity.gov. And it used to be they mailed paper statements, and I think they still do sometimes, but I wouldn't count on that.
Request it.
Yeah. Just go to socialsecurity.gov. Just so you know, there are some security questions that they're going to ask you. If you've never logged in there before, they're going to ask you what color was your Ford Pinto back in the 70s, or whatever, right? So just so you know, they're going to ask you some of that, and if you don't answer them right, of course, then you've got to jump through some hoops and things like that. But answer the questions, you can get in pretty quickly, and now you'll have your Social Security login. Once you get in, they'll actually let you pull up a PDF statement of your Social Security. That'll actually show all the stuff we've been talking about in here. So you can certainly contact Social Security, and there are a lot of good people there. So if you want to sit down with somebody face to face, Social Security offices are back open, we've heard. So you can sit down with people if you want. I
believe you do have to call and make an appointment for that.
Don't just show up.
You can also call and make a phone appointment.
Right.
If you just call in and try to catch somebody, it's probably unlikely.
Yeah.
But they're big on appointments, so plan ahead.
Yeah. So be aware of that. That's a resource. Again, you can use us as well. But basically, to apply for benefits, when you create that login, you'll notice when you log in, there's a button that says apply for benefits. You can actually click, make the application happen online. There are a few exceptions where you actually do have to go in or talk to somebody on the phone, but in a lot of cases, you can apply for benefits online. So different ways of doing that. Certainly know that that's a resource. We are going to start Q&A here as we get to the last 10 minutes of our time here. a lot of great questions that are getting queued up here. I see 22 questions. That's great.
Absolutely.
So the one thing I did want to point out while people were kind of queuing those up is that when it comes to Keystone Financial, we are comprehensive financial planners. And what that means, I'm going to click on that background.
sorry.
Yeah, that's all right.
You go. Maybe
No.
try that. There you go.
All right. Making the complex simple. This is how you know we're live, right? Is
Right.
that-
All those
the technique.
hiccups.
Yeah. So making the complex simple. We put together this piece a few years ago because sometimes it's kind of hard to explain what we do and what we do that's different than what other financial advisors or planners do. And where you can see all these boxes basically, and there's probably some more, right? We could add to this, but for the most part, these are all the different areas or all the decision points that come up in people's lives. So certainly Social Security is one of those, is that we help people put together an entire plan that incorporates this. And it's really more of a planning process over time because this stuff changes. And if you're 35 years old right now, you're probably not real concerned about Social Security or Medicare decisions right now, or required minimum distributions. That stuff, it's way off in the future, but it'll come faster than you think. Believe me. So just know that we're here for your entire life, right? Your entire career. We're here for your family to help you make these decisions, because in a lot of cases, you do only get one chance to do it right. And you certainly don't want to make unintended mistakes. I think that's for a large part what we help people do is, again, make educated decisions. So it's not if there is a mistake or something that happens or just something you don't like, right? At least it wasn't done in an uneducated way, uninformed way.
Absolutely.
So keep that in mind. From a contact info standpoint, easiest way to find us, just our website, keystonefinancial.com. Our emails are up here. We're pretty available. We can get back to you quickly, almost always the same day. We'll get back to you with answers either by email or we'll give you a call. So we're definitely here as a resource for you. We've got a team of 10 now. So we're serving clients all over the country, but home office is right here in Loveland, Colorado. And so we are right here in the Keystone Financial Studios. So
Keystone Financial Studios.
let's go. Q&A.
Q&A. So we got a couple here, quite a few actually. First one, Motley Fool advertises to get an extra dollar amount from Social Security. Click here. That's what we like to see as clickbait. Mostly what they're talking about is basically delaying your benefits as long as you can. That's about the only way to actually do it. So that's pretty much what they're talking about.
They could be offering some kind of like an illustration or something like that. Maybe where the optics that we're talking about, right? Having a good, all right, we can see all the numbers. Yeah,
absolutely.
Good.
And then here's a good one. So the rules around disability, asking someone born with a disability and has worked off and on, has been on Social Security disability before, if due to the economy, they cannot find another job, can you scroll back up? Sherry, I wasn't done reading that one. Thank you. Can they get full disability amount again? So you see there wasn't a whole lot of slides in this presentation regarding Social Security disability because they are very specific. So that is one. Instead of trying to give you an answer on here, I would actually say send us an email, use the email on the screen right there, and we can actually look into that specific situation, because there's just like there's a lot of factors with regular Social Security. Social Security disability is an entirely other thing.
It is.
So yeah, get a hold of us offline on that one. Again, you can use either of those email addresses on the screen right now.
One comment I will make about that though on disability is that Social Security defines things differently. Social Security disability defines things differently than maybe a disability policy you might have had through work. In that Social Security, their definition of you being disabled is that you're completely disabled and that you can't perform any occupation. So that's the scary thing, right? Is because let's say that you were a rocket scientist, right? Or something like that, right? And something happens, right? You had some kind of an accident or a stroke or something like that. Well, maybe you can't be a rocket scientist anymore. Maybe that's not an option. Well, the way Social Security looks at it is if you can be a Walmart greeter or, do anything, basically that you're not disabled. So just be aware of that. That's one thing just to consider, right? As far as understanding disability policies.
Yep. So yeah, we'll handle that one on a kind of one-off, because those are some pretty specific.
I like this one. If someone is married for less than 10 years and divorced, do they need the ex-partner's signature to get Social Security? You never need your ex-partner's signature to get Social Security. In fact, they won't even know unless you tell them. They won't even know
Yep.
that you are drawing benefits off of their record. So Social Security does not disclose that. There's no way you would even see that online, or that they would see that online. So just know that that's completely separate from that standpoint.
It is the only thing to married for less than 10 years and divorced. You have to be in order to get spousal Social Security on an ex-spouse, you have to have been married for 10 years or more and then divorced. And then if there was a remarriage in there before age 65, I believe, that can also impact that. So yeah, again, another one, if anybody has specific questions that, we're not able to answer here, please throw them on the email. Some of these require some research.
Yeah,
and
which
we can give you
we
more
like.
specific
So
answers.
yeah, if they're complicated, throw them at us. We think that's fun.
Absolutely.
Yeah.
But yeah, I do know that one. That is an important one for the 10 years. And then yes, Brian, we can, I think we can make these slides available.
Yes, we will. Yes, and we'll have a recording available after the fact. It'll be on our YouTube channel. So we always put these at our YouTube channel afterwards, and those are at keystonefinancial.com, and click on the little YouTube symbol at the upper right-hand corner.
Absolutely. So let's see. And Todd, I think we answered this one for you, Todd. We'll say it again. Married couple, both receiving benefits, one spouse dies. Yes, it is true that the surviving spouse will receive the higher amount.
Yeah, but not both.
Yeah, not both. You'll just get one or the other, and it's always the higher one.
Yep.
Yep. And then Bruce has a good one. Are you aware of rumors, scuttlebutt about the possibility of raising full retirement age by Congress? Absolutely. There's a lot of different things going through. A lot of things get tossed around. I think they have been for years. I wouldn't be surprised, I guess. I don't know about you. I wouldn't be surprised if they raise full retirement age again.
Yeah, probably not anytime soon, though, even though from a policy mathematical standpoint, they probably should. And they probably should have years and years ago. But again, is that a good way to get reelected? Nope. So you're not going to hear one word about Social Security from either party, other than maybe just platitudes.
Absolutely. Yeah. And then everybody telling us that we lost audio and we didn't see that, but
yeah, sorry. You. And then they say we got it back. Thank you for being patient.
Yes. Okay. Very good. So George asks, what is non-taxable income? That is a good question. So non-taxable income would be anything that doesn't come from, say, an IRA or Social Security. If it's something that comes from, say, a joint or individual taxable account, something that was put into an investment account after tax, it's grown. You might pay capital gains on that, but it is not considered taxable income to you.
A couple of the possibilities would be municipal bond interest. Oftentimes is at least partially tax-free. Sometimes there are tax advantaged investments that pay out distributions that are partially tax advantaged. In other words, where it might be an income you're receiving, but the tax is deferred on it. So that could be the case. And then in some circumstances, let's say that you are receiving veterans benefits, maybe veterans disability benefits. Yeah. Those are almost always tax-free. So we do see that as well.
Yeah, there's a list of things out there.
Yeah. Sometimes they actually do kind of related to the slides, though. Sometimes they actually will factor your municipal bond income. If it's tax-free, they'll kind of throw it back into the formula as far as figuring out your other taxes.
Absolutely. Another word on the 10 years of marriage. Again, typically what it says is that you have to have been married for 10 years or longer and divorced, and you can claim your spouse's, get the spousal benefit on that still. There are some either ors. If you were ever remarried between that time and Social Security time, that can have an effect on it as well.
It can, and it's kind of funny too, because of course it wouldn't be funny because means that you've gone through a lot of stuff, right? But let's say you'd been married multiple times and had exceeded the 10-year period each time. And then you're saying, all right, well, so which divorce benefits would I be eligible for? Believe it or not, you can pick and choose. You can actually say, well, I'm going to choose the one that had the higher earnings record and get the highest amount. So again, that's why it's very individual, right? Based off of your situation.
Very specific. Absolutely. So let's see here. If your AGI is more than 34,000 and you get 24K a year from Social Security, then 24,000, is taxed at the 85% of it is taxable, federal at whatever your tax rate is. That is absolutely correct,
Yep.
Cynthia. Yep, that 85, if you're anywhere above that 44,000 mark, or if you're single at that mark as well, you get into that 85% of your benefit is taxable, and it is taxable at whatever your federal tax rate is. So it just gets included basically as total income. And then of course you go by the different brackets of tax. So
Yep.
not all of it is taxable at that marginal top tax rate, but
Yep. Last question, also from Cynthia. Thank you. Great questions, all of you. Thank you for
Absolutely.
being interactive with us. It's a lot more fun than us just sitting here talking to each other.
Yeah,
right?
I like that.
But if you work after 70, will your Social Security payments be adjusted if the highest 35 years includes the years you work after 70? I believe the answer is yes on that. I think they will continue to factor that in. So people that continue, Warren Buffett, whoever, right? If he's still paying into Social Security, that does factor in.
Yeah, they're always going to take, and until you start taking Social Security, they will always factor in that next year of work.
Yeah.
Really, it becomes a point though. I mean, that's almost semantics, but it'd be kind of an interesting number run if you think about it. If it makes sense to not take it at 70 if you're super high earning. Of course, the thing to consider too is that under current rules, say you make $500,000 a year, you're only getting Social Security taxed on, I believe it's 144,000.
Yeah, for payroll.
First one,
payroll
44,000.
taxes. Yeah.
Anything above that, they no longer take Social Security.
So there is a maximum. There is kind of a maximum amount.
Yeah.
But in we've had a few clients that have that, right, where they paid the maximum amount they possibly could have in for 35 years. So they were a high income earner from a long, long time ago, in other words. And so that there is kind of a maximum amount that you'd be collecting regardless.
Absolutely.
So, and this is if you're already taking social. Yes, that's true. Even if, let's say you take it to full retirement age and you kept working, yes, they will take those the next year, your earnings, factor it back in. So you still can get increases because of additional work history.
Absolutely.
Yeah.
Absolutely. Good
Great.
questions.
We are right at 12:31 Mountain Time, and I want to be respectful of your time. Again, this was recorded. And so we are going to put this out on the YouTube channel, KeystoneFinancial.com. Our team is here for you. So we definitely want to make sure that you know that it's not just Jeremy and I. We've got a whole team of people that are here to support you, your family, your coworkers. That's almost exclusively how we grow, by the way, is just people introducing people to us. We've got a lot of people that we've met over a lot of years. Some of you go back 20 plus years, right? That we've probably been working together or have known each other. So please tell people, because we know this stuff is confusing. We know that maybe even you figured it out on your end, but maybe you've got a friend or a coworker, family member that they're just kind of lacking for knowing what to do on any variety of financial decisions. So have them use this as a resource. Important disclosures at the end. We keep our compliance people and the government happy with us. But otherwise, anything else, Jeremy?
No, I think great questions today.
Yep,
Obviously,
absolutely.
we talked a lot about how this is everybody's Social Security picture is very individual to them.
Yep.
So if you have any questions about how your specific Social Security is affected or could be affected or timing of it, let us know. We're happy to run those numbers. We have the calculators and everything necessary.
And we think it's fun. We like numbers.
It actually is kind of fun. So yeah, let us know. That's what we're here for.
Yep. And a lot of times we can jump on. I will offer this out to you. We will offer you a free, a lot of times even 15 or 30-minute consultation. We'll answer the questions. So at least we'll answer your initial questions. And then for those of you who want to do the deep dive and say, you know what, there's a lot of stuff here, I really want to hire you guys. Then we can talk about that, right? We are a fee-only firm, so we don't charge any commissions. We don't get paid based on products. We're independent, so we don't get paid by some big brokerage firm or something like that. So the only way we make money is based off of our clients paying us. But we certainly want to be here as a resource. And even if it's just answering a quick question, even if you never hired us, we still want to be able to help you and make sure that you're taken care of. More than anything, we want to help people. So that's why we're here.
Absolutely.
All right. Thank you.
Yep.
You guys have a
take care.
great weekend.